Hello folks, I'm LA Little and this is your weekly NeoTA wrap where we take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves one question: what happened last week? What might it tell us about the coming ones? I do this show once every week, Sunday nights, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. As far as what's happening, we have three issues, three continents. But first, let's take a look at the numbers. And there we see a pretty good drop last week, anywhere from 2.5 down to about 1.2. Negative on the year in the Dow, almost flat on the S&Ps, still some gains on the NASDAQ and on the Russell. So that's the way those numbers look. Let's look at what's really happening here, though. And as I started out saying, three issues, three continents. Each continent technically has some issues at this point. You have the potential for an ABCD structure to the downside on the S&P 500, right? That potential could take it quite a ways down. What's the key there? Well, it's the retest regen that's taking place right now. If you can get above this retest regen, that would signal that you probably have a much better chance of holding. The problem is, right, is that you come into it, you got lower volume, and that's the lowest, well, the lowest high of a swing point low. It actually could make it all the way back up to this one since that was the lowest low. That, of course, would take you right back into the top of the breakdown bar. 3 bars up, off a big fall. Historically, that's always been a pretty good time to sell into the strength. The last 2 or 3 years, that hasn't been the case. Okay, where can this thing go, though, right? If you break it down and you start looking at it, and we've done this multiple times, we'll do it again, you can start seeing zones, right, that have set up in the various areas, right? In these zones, you got these two together. Underneath that, and if you draw the larger one, underneath that you've got another zone, underneath that another one, and then finally the final one, right? All those zones become important because test of those zones, those floors and those ceilings of those zones typically end up being key areas. And as you can see, you got swing point lows here, swing point lows there, swing point low down here, some there. You can see how they tend to just fall that way. That's usually the way it works. We're testing, if we go back to this, we're testing in this zone now, this little tight zone up here at the top. And we're testing to get to the lower part of it. And that lower part of it, we're in it. We traded down underneath the swing point low on the weekly, right? We're unable to stay under it, pop back up. The test is to get back into this top zone, right? Or to make it all the way to the bottom and test and try to break to the lower one on what is the larger zone, right, that encompasses these two. And so when you look at it that way, yeah, you're testing in here, you've already broken under it, you stayed under it. If you don't get back over it right away, you're probably going to go down to this area. So that little bounce that we were just looking at on the daily, has to carry, or this thing more than likely is going to go down to these lows. It's around 2045. You break those, you're into the lower zone. Where's the lows of that? About 1970, 1980. If you stay above it, right, then you can trade in the top zone. Now that's domestically, and that's the way the S&P looks like. The NASDAQ a little bit stronger, the Russell stronger, but all of those, on the edge here, they have to either rise or they're going to start to fall. And what we've talked about on the weeks prior is that what we have and have had is a rolling type top. Now, if you look back at this and you say, okay, has this happened before? Well, yeah, but these haven't been rolling. These have been some fairly good declines when they've happened, right? The only time you kind of had a rolling flat top was here and there, and now this one. Now this one, though, we're on the monthly, has been what? Has been all the way since this area back here, which is like November of last year, or September, excuse me, yeah, November of last year. So about November here, this thing started to flatten out, has been unable to really climb and is at the point where it's about to try to roll over. And so what you can see is if this thing does start to roll over, right? If you start getting this move down, you could actually get a rolling top, and a big rolling top, not a small one, not a 3 or 4 bar one, which is what you saw previously, but a large one. And the large ones typically are associated with kind of large tops. Whether this will be a large top, it's too early to tell, but what you can see is it's totally flat. It's totally flattened out at this point. If it starts to break to the downside, that's where the danger comes in. The one thing that I've talked about many times over the years is that there's a structure to the market, and you can't get a larger decline unless that structure starts to fulfill. What does that mean? That means you have to transition trend on the longest term time frame to really turn into a bear market. Where is that price point? Well, it's a long way down. It's like 1820. We're trading at 2076, and that's after making highs around 2130. 2076, you're about 60, 70 off, but you have to go another 1820 from 2076, 2067. That's another 240 points. You got to go 10% just to get to the transition point. That's a long way down. That takes time. It usually does not happen right away. You can get a spill, a bounce, another spill, a bounce, right, and eventually work your way down there and try to break it. It doesn't happen immediately, and that's the thing that you have to stress. On the weekly, these swing point lows, right, they're set up to break. If they break, you come down, you try to break the next ones. Multiple breaks on multiple swing point lows is how you get larger declines. That's on this continent. If we go to Europe, Europe has the same sort of situation setting up. So let's look at Europe, and we'll just take one of the two. We'll take the weakest of the two, Germany. So let's use Germany as our guinea pig, so to speak. Now Germany has been, breaking swing point lows one after another as it continues down in its corrective mode. You had a swing point low here, another one there. Now you have one down here. You have a vote in Greece taking place today. How that vote goes will probably be how this market goes. I don't see any great outcome to what's happening in Greece. You can see all the way down, if you were to go back and do them, you've got ABCD structures on the downside. You've got another one trying to generate now. Each time it comes up, it has previously, right, when you break a swing point low, what you try to do is retest and regenerate lower. You can see the retest regenerate zone here. You come into it, you can't break over it, you regenerate lower. You break another swing point low, so let's take this one. What do? You come into it, you can't break over it, you go down again. You take this one, right? What do? You come into it, you can't break over it, you break down again. Finally, you get on this one, right, which hasn't broken yet. If you break down, right, you can only expect to come back into this as long as this trend continues down. So you have a declining market. Each time down, the retest regens continue to tell you it wants to trade lower. Now, if you look at it, pull it back and you look at it on a weekly, it's a little different situation. Go back to the prior consolidation area and project it forward. What does it do? It almost takes you right to where you went. Now you're fading back in. Usually you don't fade all the way back in and get into this area again. In other words, you somewhere find support above that area. If the trend is this way still, right? That's always the question. Is it still a higher trend? If we look at the ABCD structure that's in place now, that could take it back into this breakout type area, right? And get back towards these previous highs. These previous highs are going to be, right, the first time back. Well, actually not the first time back, but they're going to be the retest regen zones on the way back. Now, this one is a little bit set up differently. The CAX has it. This one doesn't. This one actually broke here, faded back in, and then eventually broke out. So this is the support zone on the way back. that would take it right back into that support zone if it continues to decline. That's the weekly on the DAX. If you look at the weekly, and so it's in the big zone. If it gets back into the lower zone, that's a big problem. But in anything above that, it's just range trading, consolidating, and you have to expect, right, because the trend is up, you have to expect it's going to try to continue that trend to the upside. If you take and pull it up, put it on a monthly, right, you've got the same situation. You've got this big uptrend. This is the October low that, you know, all the markets got hit. Goes straight up from there, right, off the QE, and now you can see this little fade that's taking place. We've seen these fades before. We've seen big fades back in 2011 when, you know, the Greek crisis back then was a big issue. It's not nearly, I mean, look at it now. You actually defaulted on Greece debt, and look at the market now compared to what it was back then. Why is that? Well, because they got QE, they got tools in place to kind of ring fence Greece at this point and to keep it from being a huge issue like it was back then. Can it trade lower? Sure. You know, will it trade lower? It's not clear that it will, right? If we draw those zones in here again, right, you kind of have these two zones that are in effect, and you can see it went to the top, pressed actually a little bit higher, now it's fading back in. If I take and draw zones inside the zones, in other words, you know, where are the support and resistance zones inside this, you have multiples, and it's trying to trade back down into the second one now. It's still playing with the top zone, right? Got up into it this last week. This week, of course, will tell us which way it wants to go. They're just zones, folks. They're just projections based on where the supply and demand is. If you look at the big price moves, the big bar up right here, for example, that's a support area. Take the top of it, 10.810. Where did you come back to? 10.797. You come into it, you have less volume, not much, but less, right? Let me point them out right quick. So this bar has this volume. This bar coming back to test it has that volume. Volume slightly less. You can't break it down. What are you going to do? You're going to try to turn and go the other way. Now, take the positive side of the coin. What happens if the Greek situation gets resolved, things work out? Potential ABCD structure on the long-term time frame, right, which is consistent with the trend. Okay? That's Europe. So fading in America, fading in Europe, we go to Shanghai. Shanghai, 30% drop. Now, that seems like a huge number, and it is. Straight down. Matter of fact, it should have bounced right here, but it didn't. That says it's even weaker than you think. This is on the daily time frame in Shanghai, and I picked Shanghai because it's the most volatile market in Asia and probably the one that everybody's eye is on at this point. Now take a 30% drop and put it in context of a longer term move, right? This particular market, I mean, just go back and look at it. It went from 2,000 to 5,000, and it did it in a year. That's a huge move. If you just came back halfway, right? Take 2,000, take 5,000. What is that? 2,500. That's 1,250 off of it. You were at 5,000. Come 1,250 off of it. What does it do? It takes you down to about 3,500. Where are we? About 3,500. It's, you know, when you get big moves, you're going to get big moves back down the other way. Breakout was here, right? It's coming back towards that breakout area. Take the top of that bar, 3406. Where did it come to? 37. Yeah, roughly 37, 36, 33. So you came down within a couple hundred points of the breakout bar. Coming down with volume, what's it going to do this week? Well, if it tests into it, it should bounce, just like it should have bounced on Friday, but it didn't. Again, another place to look at the test. If it does bounce from there, where can it bounce back to? Well, you've got a retest regen that's going to be up here now, and that happens to be the tops and bottoms of these bars, which would be a logical place to see sellers step back up. we're talking large moves, right? A trade down to here should see a bounce. A bounce should see pressure there, right? What should that do? That potentially could set up a regenerate lower, right, to take it even deeper. Or if it doesn't regenerate lower and then gets an ABCD up, you can get back up, and then you're doing what? You're doing range trades at that point. So right now, you had a range, and actually maybe there is probably the best place to draw it right now, which would take you down, not quite at that low, but would take you down into this. That's the largest ranges on this time frame. And so it would take you down probably about right there, right into this bar. Range trading is halfway down. Usually you get that deep, you're going to try to make it to the bottom of the range, which is somewhere down around 33, 3200. That's the weakest, and that's on the Asian continent. Now, there are still positives out there outside of these negatives. In other words, if I look at the Nikkei is still hanging near the highs, right? I mean, you can't get much more positive than that one. If we look at, say, Hong Kong and staying in Asia, Hong Kong has rolled over, has had some nice moves down, but look at where it is, coming back into a retest regen zone off a big breakout with lower volume. Looks pretty positive. So it's not all negative. I know it looks negative when you look at the daily charts, but you have to put it in context, and that is why we do a weekly show. That's really the most important parts of what's happening now. If you look at the news flow, there's not much in the way of news flow that's probably positive this week. You've got the vote in Greece taking place today. I'm not sure how that turns out good immediately, even if it's a yes vote. Certainly negative probably if it's a no vote. That's going to be news flow this week. Outside of that, not much in the way of economics, not much in the way of earnings. Earnings next week. Economics pick up again next week. So it's kind of a drift period, and this week probably will be more pressure as a result of that. That's it for this weekend's wrap, and thanks for joining me. As always, tell a friend, tell two. I'm LA. That is and was your weekly NeoTA wrap. Have a great one. I'll see you next time. Good night.